Today we are diving into a fresh perspective on Palantir Technologies, one that is not influenced by stock ownership or short selling. The person behind this analysis does not own any shares of Palantir, nor are they betting against it, which means this take is coming from someone with no personal financial stake. This type of analysis can be especially useful because it offers a viewpoint that is not clouded by either optimism from a shareholder or skepticism from a short seller. Instead, it gives us the perspective of someone who is simply evaluating the facts and data as they are. Palantir Technologies is scheduled to report its financial results for the second quarter on Monday, August 4th. Leading up to this report, the stock has been on an extraordinary run. On July 25th, the company's share price reached a new all-time high of $160.39. This new peak was driven by a wave of optimism from investors who believe that Palantir is entering a new phase of growth, largely thanks to its focus on artificial intelligence. Since the start of the year, the stock has climbed by over 106%, far outperforming the Standard & Poor's 500 index. This dramatic rise in share price reflects growing investor confidence in the company's ability to deliver both short-term results and long-term potential. As a result of this rally, Palantir stock has become technically strong, with its 14-day relative strength index now sitting at 65.3. This number is just below 70, which is the point where analysts often begin to consider a stock overbought. A high relative strength index can sometimes serve as a caution signal, suggesting that the stock might be due for a pullback. However, in Palantir's case, the market has not shown much concern. Buyers are still stepping in, pushing the stock higher and ignoring traditional warning signs. This continued buying pressure, even at elevated levels, shows how powerful the momentum behind Palantir currently is. However, this level of enthusiasm has not come without consequences. Palantir is now trading at some of the highest valuation metrics in the technology sector. The company's forward price-to-earnings multiple is an enormous 433.88 times, and its price-to-sales ratio sits at 130.8 times. To give some context, even companies like Nvidia, which is one of the most prominent leaders in artificial intelligence, are trading at much more modest valuation levels. These extremely high valuation ratios show that investors are not just hopeful about future earnings, they are essentially assuming that Palantir's growth will continue to accelerate at a rapid pace. In other words, a great deal of optimism is already built into the current stock price. Palantir not only has to meet those expectations, it may need to exceed them just to keep the stock price from falling. Any sign of a slowdown in growth, or even just a modest miss on earnings, could challenge the current narrative and lead to significant volatility in the stock. The bar is set very high, and anything less than a strong report could have outsized consequences. The options market is already picking up on this tension. Traders are currently pricing in a possible move of about 10.48% in either direction after the earnings are released. While that may sound high, it is actually below the company's average post-earnings move of 17.47% over the past 4 quarters. This suggests that while the market is preparing for volatility, it might be underestimating just how big the move could be, especially if the earnings surprise in either direction. Now let us take a closer look at what investors can expect in this upcoming report. According to company guidance, Palantir's management is targeting revenue between $934 million and $938 million for the second quarter. If the company lands at the midpoint of that range, it would represent about 38% growth compared to the same quarter last year. This is a strong figure by any standard, but given Palantir's recent track record and the rising demand for its artificial intelligence platform, there is a solid argument to be made that the company could once again outperform its own forecast. Looking at the company's recent revenue trends, we can see clear signs of accelerating growth. In the first quarter of 2024, Palantir reported year-over-year revenue growth of 21%. By the first quarter of 2025, that number had jumped to 39%. This kind of acceleration is not easy to achieve and shows that the demand for Palantir's products and services is not just strong, it is growing at an increasing rate. A significant driver of this momentum is Palantir's performance in the United States, particularly in the commercial sector. In the first quarter, US revenue increased by 55% compared to the same quarter last year. Even more impressive, the US commercial segment grew by 71% over the same time period. This followed a 64% increase in US commercial revenue in the previous quarter, which highlights a trend of consistent and rapid expansion. These figures indicate that Palantir's business in the US is thriving, both in the private sector and in government contracts. Palantir's US commercial business has now grown to the point where it generates over $1 billion annually. This expansion is not just coming from new clients, but also from existing customers who are deepening their relationships with the company. In the first quarter alone, the total value of contracts booked in the US commercial segment reached $810 million, which is a 183% increase compared to the same quarter last year. Palantir has secured more than $2 billion in US commercial contract value. Even more encouraging is the fact that the remaining deal value in this part of the business has gone up by 127% year over year. This suggests that Palantir has a strong backlog of business that will support continued revenue growth in the coming quarters. The company has also seen its customer base expand rapidly. It now serves 432 US commercial clients, which represents a 65% increase from a year ago. Furthermore, Palantir has doubled the number of million-dollar contracts compared to the same period last year, which is a strong sign of growing deal size and deeper customer engagement. On the government side, the company is also performing very well. In the first quarter, revenue from US government clients increased by 45%, reaching $373 million. Palantir has been especially effective at securing contracts related to artificial intelligence, and this strength is expected to continue into the second quarter. In addition to growing the top line, Palantir is making improvements to its bottom line as well. The company's profitability metrics are showing a clear improvement. Adjusted operating margins reached 44% in the first quarter, which represents an 800 basis point improvement from the same quarter last year. This improvement in operating efficiency is expected to carry into the second quarter, helping to drive stronger earnings results. Analysts are currently forecasting earnings per share of 8 cents for the second quarter, which is more than double the 3 cents per share the company reported in the same period last year. With its growing customer base, expanding contract values, and increasing demand for its artificial intelligence solutions, Palantir appears well positioned for another strong quarter. The company is showing a clear trend of accelerating revenue growth and improving margins, which together create a powerful formula for long-term success. However, despite all of these positives, the broader market remains cautious. Most analysts currently rate the stock as a hold. The reason is not because Palantir is underperforming, but rather because its stock price already reflects a very high level of expected growth. At these valuation levels, the company is essentially priced for perfection. Any small hiccup in the second quarter earnings report could lead to a pullback in the stock, even if the long-term story remains intact. For investors watching Palantir ahead of the second quarter earnings, the key will be whether the company can continue to beat expectations. With strong demand in both the commercial and government sectors, a growing artificial intelligence platform, and improving profitability, Palantir has all the pieces in place for another strong quarter. But the market will be watching very closely, and expectations are sky high. Essentially, Palantir Technologies is set to report its second quarter results on August 4th, following a strong rally that pushed its stock to an all-time high of $160.39 on July 25th, reflecting growing investor confidence driven by its artificial intelligence offerings. The company has seen year-to-date gains of over 106% and continues to deliver rapid revenue growth, especially in the US commercial sector, where revenue climbed 71% year over year in the first quarter. Palantir's government business also remains strong, with a 45% increase in US government revenue. Despite reaching record valuation levels and being priced at a significant premium, the company's strong momentum, expanding customer base, and improving profitability, with an expected second quarter earnings per share of 8 cents, have set high expectations. However, given the steep valuation, any earnings miss or signs of slowing growth could introduce significant volatility. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.